Good morning, traders. Chris Buss here with your morning look at markets for Wednesday, December 22nd. It is 7:20 in the morning as I'm starting the video. First, some programming notes. I'm going to be kind of scarce between now and the new year. I won't completely get away from the charts. What I want to do is do some more deep diving into the charts, into sector rotation, stuff like that as we head to the new year. So I'm going to sporadically send you information, not on a particular schedule, but more or less when I have something to say or have something that I feel would be, important for you to be aware of heading into the new year. So don't be worried or concerned if you don't get well, I know you're not going to get anything tomorrow because my parents are going on a cruise and I've been drafted into giving them a ride to the port. So I'm going to be away from the desk most of tomorrow. So then it'll be on into the Christmas holiday. Markets are closed Friday, and then we're into the holiday, and then we're in that week between Christmas and New Year's. So if I don't get a chance to talk to you between now and then, I hope you and your family have a really, really nice holiday together, and that you're able to catch up with family, especially if you're traveling or having some kind of get-together. Safe travels there. So I hope everything goes great for the holiday season. Okay, also, yesterday you may have seen where I sent out a request for donations. If you've had a good year and I've helped you along the path, I really appreciate that. And I've got a shout out to a bunch of people that took me up on that and made a nice donation to Traders Profit Compass to help me support the work, keep the lights on, all that kind of stuff. So a heartfelt thank you to Robert, Rokas, Don, Gerald, David, Corey, Stan, Aaron, Marcus, Punk Rock Guy, Vincent, and Frisco, and also to someone who wanted to be identified as someone. So someone, thank you, and thanks to all the rest of you. You'll notice that going forward, I will keep that donate button both on the YouTube site and also on my morning notes. If something strikes you or you make a ton of money on a trade, or if something's going good, I would certainly appreciate anything you want to kick back my way. So thank you so much for doing that. So let's get into the charts. I want to hit futures and macro real quick. Futures are basically flat. We do have an important print this morning on GDP. We've got consumer confidence, Chicago Fed, and there's a 5-year TIPS auction at 1 o'clock that a lot of people will be looking at in terms of, that's the inflation protected bond. So that might be telling as far as future expectations on interest rates go. And then on the earnings front, not a lot going on as we wind up the year. We've got CarMax and Paychex this morning, I believe, before the bell. So if you're interested in that, you can take a look at that. So let's go on to the VIX. We closed that upper gap. We came down yesterday and closed the lower gap. So I don't see any open gaps on the VIX chart. I think the thing to look for today and then the days ahead is for a drive below 20. That would put us in a much more comfortable range between 18 and 20. And then, of course, the next level below that would be below 18. And if you saw a general trend down, then that would certainly bode well for equity markets. Probably seeing a lot of green on the screen if we make that break below 20 and then certainly below 18. One thing I want to call your attention to today on the blog, in the market insights section, I've got a panel that shows January to be the strongest month of the year in terms of inflows into equities. And I think it was Goldman's comment that they expected even more because, all your big money managers and, investment advisors will likely be telling their clients, hey, we're entering into a new regime with interest rate rises kind of scheduled and with inflation, still raging, no sign of letting off on that yet. So, if you've got some kind of an allocation to bonds in a rising rate environment, they're going to get killed. To put it bluntly, if we kick up those Fed increases, or if inflation keeps raging and the market does some of the work for the Fed, any kind of rising rate environment is going to whack bonds. So there may be additional inflows from bondholders into equities as well. So take a look at that graph. I think there's going to be possibly be a good bid under the market in early January. So we want to be aware of that. I mean, that's nothing where you just blindly pile in, but if if we sense strength under the surface, we're certainly going to want to have that in the back of our minds as something that's going on in the background. Also, we've been following the percent above 50. This is the NASDAQ, and you can see we're kind of at the lows. We've had a little bit of improvement over the last couple of days, not a lot, but you can see in the chart it really doesn't go much lower than it is now. And if you click over to the NYSE above 50, it has started to advance a little faster, with that reading more or less in the low 30s. So maybe we're right at the point now of an inflection higher. Certainly we've had a good day in the markets last couple days where we had that initial scare early in the week and things seem to have stabilized. And really, if you look at the calendar, you'll also see this on those market insight panels this morning, that right now is really when the Santa rally begins. It's not early December, it's now through like the first week of the new year. So we've got some strong seasonality going in our favor. I think the key thing now is to get follow through on the last day or so of trading, and then maybe we'll end up getting a nice run up into the new year after all. So looking ahead to SPY, yesterday we had the let's just look at this. The other day, which was what was it? Monday. Yeah, Monday, right here. You'll note that 3-bar reversal at the bottom. Now, this is more or less candlestick reading. It's not tied to particular technical levels, but this is the 3-bar reversal. Red, hammer green, and then the next candle higher than your last red candle. So that's a 3-bar reversal. And then yesterday we got a gap up, and then they came down, tried to close the gap, didn't get all the way. This is the leftover gap that wasn't filled, and then proceeded to have a nice advance the rest of the day. So just looking at this, remember the gold EMA on the 2-hour equates to the 50 on the daily. So we open high. If you'll remember, we had that first kind of hour of selling and then they bought it up. So let's look at possible entry points. Number one, recapture of the 50. So we were below the 50, then we recaptured it. That was a objective buying level. And then if you missed that, you had 459, which you'll see was support, 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 Now that was resistance since we broke below, and so the recapture of 459 was a buying point as well. I think today the first sticking point will be 464, and I think if there's going to be a rejection, it would happen right there. Why? Because this enters 64 marks the low side of this big value range. You can see it here, the three biggest volume over price bars on the chart starts at 464 and works its way up towards 460, 750, 468 right in there. So that's going to be the first level of significant resistance. And I think if it can poke through that, then, there'll be some sticking points higher. But I think that will be the first pivot of the morning, if you will. And if you were to see a problem at that level, it's always an objective level to take a shot. If you sense that, it can't get through, then you can be short against 464 and look for a little corrective move from here. And you can lay on your Fibonacci's if you want from low to high and find out where that 38% and 50% halfback levels are. And if you get a pull in to that level, then you can, rotate out of that tactical short. But I think right now, just given the posture, everything, we've got an RSI break above 50. We've got a bull cross on momentum. I think upside is favored, but if you're an active two-way trader, you can certainly play these pullbacks and more micro moves if that's something that you're into. And you can see it right here where that 464 comes in on the 30-minute chart and the accompanying overhead resistance levels to be aware of once you get a breakout here above 464. Moving on to Qs on the 2-hour, you can see here we've got a bull cross forming. The PPO histogram has gone positive here, and we've also got a breakout above 50. So those are supportive of moving higher. I think it's pretty clear here that our first pivot is right at 389. And if we can get a break above and a strong opening, I think your first level of resistance is going to come in at 392 and then right on up the level. Looking down at the 50-day moving average in gold, we see that that has been recaptured, so that's a positive. Let's look at what could have been done yesterday as far as your active trading goes. So this was the close on Monday, right here about 380. We got a big gap up, and then they faded that move to close the opening gap. So remember those gap rules that we had? Once you get a gap open higher in the morning, you've always got to be cognizant of the fact that there's a tendency to want to fade that move, do a technical backfill, and then once the opening gap is filled, then reverse and go higher. So I don't have the gap marked in here, but you can see it was from more or less 380.50 up to here. And then when they started moving back down, that was your cue. Even if you didn't trade the backfill, be short for coming back, you saw that when that gap got filled, then that's your cue to be long against the gap fill. If I've made that clear as mud, Hopefully you understand what I'm saying. But let's say you didn't get that, right? So you were just watching and you didn't buy on the gap fill. What could you have done? Well, we had a level at 382. That was a recapture. Certainly at 383 was a really important level. And the reason I say that is why. Look at all these support levels here, which made that an important level. The more touches and reactions you get off of a level, the more importance that it holds. So that recapture of 383 was certainly a buy point, and then it really never looked back. So you had an excellent chance of, if you got in at 383, you got a $6 move into the end of the day. And the nice thing about that move was there wasn't any shakeout candles, anything there to scare you. All you had to do was kind of hold on for dear life as it moved up, and then it stopped on a dime right at this 389, which we also had on the chart. So there was certainly some good trading ops on the Qs yesterday. Here's IWM. We had the gap up, which is marked, and they tried to come back, but they didn't do it, and then they just moved higher. We had this large volume over price bar here, right at what is that? About looks like 217. Broke the downtrend line and moved a little higher. I think today you can just stay long against this level. Let's look at it on a 30-minute chart. Yeah, stay long against 218. If it can poke above, then you've got a little resistance level at 219.50, and then there's more of an open path higher. There will be probably a little sticking point here at 222.50 on this volume over price bar. But then after that, the big objective will be make it back to the bottom of the gap. I just want to go back here on IWM for a second. Keep in mind here that you've got the 50-day moving average coming in right at that, what is it? Right here at 223, call it 223.50. That will be a big hurdle technically. Why? Because it's the 50-day on the daily chart, and that will be a resistance level to overcome. And then after that, if you're already long, then you can roll up your strikes and your stops to just below the 50 after it's recovered, and then you can stay long against the 50 on a more of a longer duration type trade. Facebook. Let's look at the levels. We had this early week weakness where it came down and found some support at 324. The first red candle of the day was the gap open, where they, as soon as they opened it, they sold it back down to fill the gap, and then they reversed. Let's use that same methodology and our technical analysis thinking that we just talked about on the other ones. Say you missed the gap fill entry long, so now you're watching it, right? Where could you have gotten in? Well, really, on this chart, the most important level was this 327 line. Why? Because we had all these reactions along that line. Look at all these touches. Even back here, it seemed to be an important level with price, hugging it for quite a number of hours. So we break down below if you've got a big line of resistance here and you drive above it, you recapture it, then all that stuff is support then. So you had a really nice opportunity to get an entry here around 327, stay long. Then there was this prior gap that had not been filled. Anytime you break into a gap from below, it's a buying opportunity. And then finished right on up, kept going right up into this 337 area. So there were definitely some lines where if you were paying attention and you wanted to be involved, those were good levels. Now, let's just talk about something else that just came to mind. What you can do ahead of time, and it doesn't have to be the day of, but if you find a critical place on the chart where you say, okay, if price breaks below and then comes back above, and you've got a very important level on the chart alarmed, then you really don't have to be, glued to every 5-minute candle. You can wait for that alarm to go off. But if it goes off, you got to be ready to go, because that was a great place to get long. And then if you did, you got some real nice follow through. Moving on to Apple, same kind of price action, gap up. They sold it off to fill the gap and then drove higher. I think here you can stay long against 172.50. Your first line of resistance will be at 174, and then 176 right on back up the ladder. Tesla spent a lot of time here at 900, had the gap higher. They sold it off to fill the gap. We had this open gap remaining from the day that it gapped down on, I guess it was Monday. So you had the reclaim of 900, you had the gap entry at 910, you had the breakout at 930, and you took out downtrend resistance at the same time. So I think today you can stay long against this 930 area, and then look for a move towards 970. So that's Tesla. You can see here on momentum that it's been rising, even though price really hasn't. So there's some underlying buying pressure there. Same thing on RSI. Note that RSI bottomed out way back here when price was here, and now price had gone a lot lower, but RSI is higher. So there was some buried positive divergence there in Tesla. So that's looking a little bit better. Microsoft. This one was really interesting. No real gaps on the chart from earlier in the week. They went back up and filled those. And then they made another run at this prior low. Yesterday, there was the gap up, this black candle, and then they sold it off just like the other ones, closed that morning gap, and reversed. So you had the prior low tested, then you moved up to these levels. So each one of these reclaimed levels were potential buying points if you were interested in it. Here was an important level at 324.50. You had 3 reactions along that line, gave it a little bit more importance, and then a break above there, and then right on up the line. I think the next big level is a level that we've already identified on the way back down. In fact, we said over here You lose 329.50, 330, right in that area. You want to be short. You got the breakdown in the back test. And then eventually they made a run, but then they sold it off again. Came back below 330, and that was a big move right there. So you've got a big line of resistance here right along 329.50, 330. If you get a breakout above that, then that's definitely a buying point. And I think that's one where you can put a little bit more duration on your trades. Maybe, if that gets reclaimed, then you can maybe look out into January and figure on Microsoft making a run to fill this gap and maybe get all the way up into the 342s and possibly even the prior high, because then you'd have an opportunity to put your stop right below this key level here. And, if it reverses and stops you out, that's trading, but you certainly would have an objective entry at a very important line in the chart. Let's look at Amazon. Again, some really interesting technical action. Why? We had a divergent low back here a couple week or so ago, 10 days ago. Had a lower low, but PPO was higher. RSI really wasn't higher, but you had a low here, and then you had a back touch, another back touch, a fourth back touch. And so yesterday, with the gap open, which they faded and came back for another touch of 3,300, that would have been an objective place to buy. Why? Because it's already been tested 3 times before, and the bears hadn't shown any power to be able to drive it lower. So there was an entry point. Recapture of 3340 was an entry point. Entering the bottom of the gap was an entry point, and then a breakout from this gap fill was an entry point. So few places you could have entered, but even now it's at a very interesting spot because it's breaking this downtrend resistance. So if you were a little timid down here or not really prepared to trade it, no harm done. You can stay long here against 3,400. Why is that a good level? Well, because you got the top of the gap and you've got a breakout from downtrend resistance, and then overhead you could look at these various levels for potential sticking spots. And really the most important level that I see overhead is this 3,500 for the same reasons. All the other levels were important. There was a lot of reactions along that line, and this is the large volume over price value area. So if you can get a breakout above 3,500, I would assume that price is going to go back up to 3,600 to test the top end of value. Remember those trading cues. Once you break back into a trading range, then your target's the far side. So we had this trading range back here between 3,500 and 3,600. So a break back above will set things up for a run to 3,600. Google, same exact kind of technical action. Gap higher, faded it, back down to back test this 2810 area. If you missed that, no problem. This was the key level, 2835. I don't have the arrows in here, but look at all the reactions along that line. And so a breakout from that level was definitely a buying point. Another definite buying point was 28.50. Why? Because that was your largest volume over price bar. So above that was definitely a check mark for the bulls. And then it has come up right here to test the bottom of this gap that was formed last week. So I think today you're basically looking at 28.70, 28.75 right there at the bottom of the gap. And this technical level here, you can get a gap fill. And above 28.95, I think things will get easier for a move up to 29.25. And then that will be kind of the last line of defense, because look at all the reactions back here. If there was going to be a big rejection, I think it would come right here at 29.25, where all of this action took place. And actually here was, an indecision point. And here was another point along that line. So I think this 29.25 should be highlighted on your charts for an important level. Netflix. Again, you had this bottoming action here right against 585. Tested multiple times. Could not break. Then the bulls finally got something going. If you didn't want to mess around too much with the active trading on this chart, I would be putting an alarm at 617.50, 620, right in that area. Why? Because that's the top end of this value range. And you can see that above that level, the technical resistance really drops off. So I think if price can get above 620, I think you got a good chance to make 645. You'll definitely get a potential hesitation here at 630, but I don't think it's going to be enough to stop it if it got up to that level. So if you wanted to take more of a duration position, I would be setting an alarm at 617.50, 620. If you get that alarm to go off, get long, give it some time to work, set your alarm just below, and then look for a fast move up to 645, where you'll start getting into a tougher area of overhead resistance on the chart. Lastly, SMH, semiconductors. Nice illustration of a bear trap. What is a bear trap? Well, it's a technical event, a technical event that would lead bears to believe a big breakdown is coming, and then they reverse it and make all these people wrong. It's the same idea of a false breakout, and then they faded it, and then proving all the bulls wrong. Let me go back and show you just for a second here. IWM. Notice we had the big breakout from this range. They came back and then it failed. So you could easily put a circle around that and say that was a massive bull trap. Everybody up here that bought, thinking, oh my God, it's we've got a massive breakout, ready to go, and then it fails, all these people know they're wrong. And so they're all sellers at this point, and then that's what drives price lower. So same thing in reverse here on SMH. This technical breakdown below 292, our technical rules say you break down, you lose support. That's a selling signal. Yeah, it is. But you had about, 3 hours to change your mind because then they reversed it. So if you had gotten short, you'd have had your stop above. And then once that was tripped, you got to say to yourself, I was wrong, get out. Don't stick with that position. And I think we also noted the other day that we had bullish divergence. So, you had a low here at a low on momentum and a low on RSI. You made a lower low in price, but you had a higher low in momentum. You had a higher low in RSI. That's the definition of bullish divergence. So yesterday morning, when they gapped it up, when they tried to sell it off like, all the other charts that we've looked at, they couldn't really, they couldn't fill the lower gap, so that remains. But yesterday, you had a good technical level at 290, 297.50. That was a line that we had on the chart. And now, they had a really nice run up. Remember that Micron blew it out of the water, so that was helping. AMD was ripping yesterday. I didn't look at NVIDIA, but I'm sure it was ripping as well. So when you got all those big semiconductor names working, SMH is going to work too. So we're right here. Logical place for it to stop. Why? Because largest volume over price area on the chart. We had that 302 marked from way back here. So today, I think 302 is your pivot. And if you get a break above that, I think you can be long. And if they want to gun it, I think your next area of resistance is 308 and a breakout there. I think they'll run it back up towards the top at 313. So that's where we stand today. I hope the levels help you. Certainly if you're new here and you appreciate the analysis, having the levels lined out, please hit the subscribe button and the alarm bell. That way you'll get all the YouTube content. If you want to jump over in the show notes, you'll find a place to register for all my content. All it takes is an email, takes 5 minutes, and then every time I publish something, you'll get a note directly in your email box. You won't have to hunt for it. So, happy holidays, everyone. Hope you had a great year. Take stock with your family. Have a good time for the holiday. Do some contemplative thinking, recapping your year, things you might want to try different heading into 2022. I'm really looking forward to it. I hope you are too. So until we talk next time, this has been Chris Buss with Traders Profit Compass. Talk to you on the next video.